Varsha, I mean, what we were discussing 2 days ago when the US CPI data came, the market reaction was perhaps negligible. Uh, it appeared that time that inflation impact was more like an old story for equity market and for the bond market. But out comes the hawkish comment from the US Fed. They're clearly making a case that inflation is a concern. And the market reaction in two particular categories. I always look at the macro reaction in the dollar index, which is at 104. It's not a scary level. And the 10-year is at 3.86. Crude is a moving part because a lot of other factors, including China opening up, are having impact on that. So just when it appeared that financial markets would see at least uh, no concerns in 2023 on the inflation front, the US Fed hawkish commentary seems to be just stirring the sentiment because 2023 so far, if you ask me, the outperformance is there in developed markets, the outperformance in there in growth stocks. Crypto is making a comeback, and these categories typically do well when worlds know that interest, when financial markets are convinced that either interest rates will peak out soon or they already have peaked out. So it's a bit of a stir. Uh, Now let's see how things move. We are not at that kind of an alarming level in terms of when inflation concerns were at its peak. That time the dollar index was 115, the US 10-year paper was way above 4%. So we are not there. I don't think we will reach there yet. But what this will do is that it will do two things. One, it will test the outperformance of developed markets. That's been the outperforming patch this year. If global markets they peak out, will the 2022 story will be at play again, which is that India starts outperforming. Uh, in the near term, that is what you would need to monitor. The moving part here is dollar index. So I don't think there is a worry, there is a concern, but it's a wrinkle. I mean, it's going to stir the sentiment, if you ask me.
Yeah, talking about not ruling out more rate hikes. So clearly, that hawkish commentary seems to be playing out on not just the US markets, but Asia as well as deep in the red, barring Shanghai. And the SGX Nifty, it's off to a negative start, down about 0.5% or so. But our markets clearly seem to be in a sweet spot right now, at least 18K being maintained. And you saw the traction building up even within the broader universe in yesterday's trading session. 3 straight days on the chart that you've seen a move on the upside. The market breadth as well remaining positive. The fact, Nikunj, as well, that adding to the mix, FIIs continue to remain net buyers. All of those seem to be putting our markets in a rather sweet place right now.
Well, it's looking much better than what it was. Imagine the market 15 days ago.
Yeah.
There was this Adani Group sell-off fiasco. Markets were worried about FI selling, and in general, the technicals were not that strong. Those three concerns which bothered the market, let's say 15 days ago, they are they are looking settled now. FIs are back. I hope they're really back and they're here to stay. B, the kind of excruciating sell-off what we first saw in consumer tech and fintech and then Adani group of stocks, that's clearly behind us. Adani stocks have stabilized, and also consumer and fintech stocks are finding some buyers, and the opinion towards, let's say, Zomato or Paytm or Policy Bazaar has decisively changed. So the two large pockets of weakness in the market, that in a sense that is getting addressed. Because heavyweights are moving higher and Nifty is closed above 18,000, is there a case for Nifty now to gradually not climb, not jump, but crawl? I think crawl is the word. Nifty is crawling. In this crawl, will the buyers be positive? Well, I sincerely hope so, because you're getting support on the liquidity front, on the technical front, and on the FI, on also with large heavyweights. So it's not like going to be a Dhamakedar Friday. I think it's going to be one of those lackluster Friday with the positive bias. I think 2 weeks ago we said thank God it's Friday because markets were volatile. But I think today you would say it's okay, it's a Friday.
Yeah, because we've had better days over
We've
the
had better
past.
days. So
Yeah.
the scare in the market is over, but the excitement in the market has not returned.
Yeah, but at least we're back at that sacrosanct 18,000 psychological level. I guess that is something that the bulls can take relief from.